Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone's doing great. Just wanted to let y'all know, sooner you get your questions in, and I see a few coming in already. I just go through them top to bottom. So even if it's just a symbol, let me know what you're looking at, maybe even the time frame too, and we'll get to it. All right, so first place we're going to start is at the Forex Factory calendar, taking a look at what we have in terms of hot zones this week. Today's pretty quiet, so when I'm working up the notes for the Sector Secrets Mastery, something that we do during the trading session, so we're all on the same page. Not much to work up other than Bowman already having spoke at 8 a.m. And the takeaway from Bowman seems to be that he's not seeing as much moderation and inflation as we would like. Yeah, I think ultimately, she. Who is Bowman? I can't remember. Is it Michelle? I can't remember who it is. Michelle Bowman? Anyways, all these Fed members are starting to blur. I think it's Michelle Bowman. And she's saying that it's not moderating. Well, what does that even mean? And do we care? And does that move the needle? Let me show you how we're going to do it. So Bowman's already spoke, and I believe that we are still looking at, yep, we sure are. Take a look. We're still very much looking at a 1/4 point hike in March, a 1/4 point hike in May, and it's neck and neck, gang. It's neck and neck that we could get another 1/4 point hike in June. But here's the big question. Do we hold in July? And it looks like the answer is yes. It looks like the answer is yes. So one way or the other, it's becoming clear that the target rate, the terminal rate that we're going to reach, that peak rate, is 5.25 to 5.5. Whether we reach it in June or whether we reach it in July, it looks like it's a 50-50 shot that it's either 5 to 5.25 or 5.25 to 5.5. That's how we measure hot zones, right? And I believe Bowman's the only one. Yes, that is it. And so let's get to the chart, shall we? Let's get to it. Now, ultimately, I believe that our main focus is going to continue to be on the data. And I think somebody asked me this which is a great question, at the Raghee Report show yesterday. And if you haven't checked out the Raghee Report, you can. It's over at the Simple Trading YouTube channel. And one of the questions was, is bad news still good news? And is good news still bad news? And I believe yes, as we're trying to figure out whether we end up at 5 to 5.25 or 5.25 to 5.5. Absolutely. All right, so let's get to it. And first up, in terms of our questions, let me move these charts a little bit further out of the way. There we go. All right, so first up is, hey there, Jack. Good morning. It appears the 6E, let's go take a look. It appears the 6E is overbought on the daily multi-trend. Overbought. Remember, the multi-trend doesn't tell us if something is overbought or not, Jack, but I love that you're thinking in that way. Does this affect the indices in a bullish way? Well, let's start with the overbought part. Maybe oversold. So I do that all the time. I'll go, oh, no, I meant oversold. Oversold. And does this affect indices in a bullish way? Yes. So if this is indeed oversold, meaning it's reaching support, it's more likely to bounce from here than not. If that's the case, yes, that should mean US dollars will be weaker. And yes, that would generally be bullish. That particular influence, weaker dollar, would be bullish for equities if the euro bounces. So great question to kick off the morning. Thanks, Jack. Good morning, Christopher. Looking at the ES daily. All right. Let's jump on over there. Would I say that we are still in a distribution movement? No, we are, or have we moved into an uptrend? Yes, we are no longer in a distribution chop. Correct. We are now in an uptrend. Yes. So say the telltale multi-trend. Yes. And so now buy the dip is absolutely viable. Buy the dip, buy the DPMR, buy the 200 propulsion. I want to be a buyer on that longer term time frame. Absolutely. For overnight exposure, aka a swing trade. Absolutely. All right. Thanks for the question. Hey there, Stacy. Yeah, the game was good. I really did think the Eagles were going to win. But I'll tell you what, gotta give who's the OC for the Chiefs? Benamy. Gotta give Benamy credit. In that 29-minute halftime, they sorted some things out on the offensive side, and I gotta give Benamy a lot of credit. A heck of a game from both sides. All right. Yeah, now time for another trading adventure. Absolutely. All right. Great game. It sure was. Is XLK a buy? The dippable. I love it. On the daily. XLK, that would be a yes. It is buy the dippable on the daily. You bet. And again, whatever your definition of a dip is, Robert, time it with, if you can, some of the hot zones. That's something we do in the mastery quite a bit. How does the YM look this morning? It looks neutral to bullish on the 5-minute. It's neutral on the 1 hour. And it is neutral on the daily, Mimi. That's how we look across some of the time frames, 3 of the main time frames that I trade from. All right, next up is, let's see, Jack. Oh gosh, Jack, no apologies. I do that all the time. Oh gosh, yeah, I do that all the time. Please, we use so many words. Some of them are bound to be wrong, right? Well, we're on the topic of the Dow and the indices for that matter. One of the things, and I'm looking at my my journal here. One of the things that I want to continue to keep an eye on, and let me show you all here. One of the things that I want to continue to keep an eye on in this quest to get clarity in terms of macroeconomic clarity, what is the Fed going to do? Let's keep an eye on bonds. Bonds, we talked about whether or not, kind of going back to Jack's question, whether or not something's oversold or overbought. We are looking at an possibly oversold bond market, which if it were to bounce would be bullish for equities. We're looking at an oversold euro, which if it were to bounce would also be bullish for equities. And then if we jump over to the NASDAQ has a lot of proximity, as you can see right here, to the 200 propulsion. And we also have a green uptrend. And we have the DPMR, our daily price movement range, sitting just at and below that 200. Those are going to be good zones, again, to keep an eye on. And then if your time horizon's a little bit shorter, still overnight, right? Not day trading, but it's a little bit shorter. Take a look. This is where the DPMR starts, 12,183. Right? That's where it's sitting right now. And that is going to have a shelf life of today. We're going to have that kind of accuracy where today, based on highs and lows, we'll get an idea of where those volatility support and resistance levels are. So if we circle back to Mimi's question on the Dow, do we have something with that kind of proximity? We really don't. We really don't have that kind of proximity. And if you all have any questions, again, we have about 9 more minutes, so feel free to type them in. If we take a look at what's going on with the support and resistance on the Dow, well, let me ask you all this, because this is something that will undoubtedly come up when I'm with the Mastery folks here in about 10 minutes. The question will be, which do I want to be bullish in? NASDAQ, S&P, or Dow? And frankly, I don't want to be bullish the Nas. I don't want to be bullish the Dow as much as I want to be bullish the Nas because of the structure. Prioritize the uptrends in your life, gang. Now, that might be at the index level. That might be at the sector level. Take a look at XLK and XLY, right? These are the ways in which we want to think about cracking open. That's the sector secret, if you will. We want to think about cracking open these broader averages into their individual pieces. And that's where I think a lot of times we end up with questions like Amazon and Tesla so often, because we like trading these stocks. Obviously, they're very popular, but their weighting, their influence on XLK, XLY, QQQ, NQ futures are hugely significant. One of the things that we're watching for is a buy on Amazon. We want to be pretty bullish here. Overall uptrend. And that means, again, as someone mentioned, buy the dippable. Absolutely. All right, let's circle back to the questions here. And ZB, iPod Touch asks, ZB, have a daily squeeze that is fired short and also an M chart pattern as well. I think bonds lower for longer. Do I agree? Not really. They could head lower. Look, I'm not going to ever say I know where markets are going to go, but I would have to be mildly bullish, mainly because we're neutral and we're oversold. I won't play momentum for other than maybe the very, very short term. For now, I will trust that the neutral market is going to lead me more to overbought and oversold assessments. And when I look at my slow stochastic, I see that we're oversold. So let's go back and say, okay, Rog, have we been here before? Have we been in a situation where we've been oversold on the slow stochastic in a neutral environment? So the answer is yes. Let me show you here. And by the way, I don't really use chart patterns at all. Not really. I just don't use them at all. I use price patterns. So there's a big difference between the two. One, price patterns are based on price, open, high, low, close. Chart patterns are far more subjective. I am not a fan of subjective tools for traders who are just learning how to trade, because it requires a little too much trade craft, right? So here's the last time oversold in a neutral market. So I will expect another pattern, price pattern, likely a minor low. That's my preference for a price pattern. Look for a minor low pattern to set up another move to the upside. In the meanwhile, until we achieve that pattern, that price pattern, we could move a little bit lower, sure, which is why I think for momentum traders, they'll use, say, something like a squeeze and look for lower lows. But for traders like myself, we're looking for exhaustion and a bounce like we saw at the end of December. We'll wait for that price pattern for confirmation. So it doesn't have to be as much as, who's going to be right or wrong. I think momentum traders could be right in the near term. And then in the slightly longer term, the exhaustion buys will be able to benefit from that bounce. All right, QRVO. Hey there, Kevin. On the daily, let's go to the chart with our wave and grab here and take a look. What's the market structure here? It is an uptrend. It's north of the 200. Kevin, I like this area potentially for a buy. I don't know anything about QRVO, so I would definitely, do a little digging around, but purely on price, purely on the indicators that are studying price, we have this is a buy the dip. It's a buy the dip. All right, Robert asks, XLE has started to move into neutral territory. Actually, let's see here. Let's get this centered on the screen here. Actually, I don't know why I have it pushed way off. 86. I don't need this pushed off. 86 VARs and the hard right edge. There we go. Okay, so take a peek here at XLE. Has it started, Robert? It's been in chop since the beginning of December. So to your point, we are a full 2 months plus into back and forth chop, which means turn on the slow stochastic. Find the oversold, overbought levels. Favor the long side. Look at the DPMRs. Look at the Darvis. And I think you're in good shape. Now, bot called Exxon. So quick shout out to the bot. This was a long that we had in the Sector Secrets Mastery just Friday. Bot called this one out. It was a beautiful setup. We had no idea there was Russian news. I don't play news. And what do we do instead? Bot saw an uptrend. she waited for the dip, and that was the play. And when we take a look at Exxon, which is the heaviest weighted stock within XLE, and I love that you're looking at both, Robert. Exxon is more bullish than XLE. This is if we look at the tide, XLE, the energy sector, and Exxon, an individual large boat, I agree with you. I like Exxon, but I wouldn't touch it for now. You might want to take a look at CVX or just crack open. And this is what I teach folks to do. Just crack open the energy sector and ask yourself, where is there a setup? Where could we have a nice move to the upside? At the moment, I don't see much. Remember, Exxon's going to carry this zone higher. It is going to carry the zone high, this corner of the market. It's going to carry this sector higher because of its weighting. So when XLE moves higher, right, a rising tide lifts usually all boats. All right, next up, should I still be keeping my anchored VWAP on the 1st of 2022? Joseph, I've moved my anchored VWAP. I anchor VWAPs. I never use rolling VWAPs. And I want to move that. We did that already, January 3 of this year. So we've moved the VWAP and the V score to this January 2023, the 3rd. Okay. All right. Next up, how you doing? Is there a slow still with arrows that one can use on TradingView? Other than the one that we have coded for the Sector Secrets Mastery, I actually do not know. Muzunda, I actually don't know if there is or not. There's so many. I don't believe so. You don't need the arrows, by the way. You really don't. I don't wait for the arrows. The whole key to using a slow still, my friend, is making sure that number one, you're slowing it down. That's what I teach, right? And it's the same setting that I've used for over 2 decades, gang. 21K 3D, overbought at 80, oversold at 20. It just works. So we're looking for the movement to the 80, to the 20. But here's where a lot of traders sometimes misuse, if downright abuse, a slow stochastic. They use them in a trend. They are not as effective in a trend. There is some use, right, to the mid 50 point for retracements and continuation. But I'd rather use a reversion to the mean with the 34 EMA wave. I'd rather use the daily price movement range. So that's just me. But if it happens to sync up with, say, a quick move to the halfway point on the slow still, not too bad. But in a chop, in a non-trending market, it's excellent. It is excellent. It's very effective. It's something that we can use with a high degree of accuracy. All right. Okay, gang. And just like that, we are out of time. Thank you, as always, for joining me for our Charts and Coffee show. Love that y'all are making time out in your day to start the morning. I'm going to head on over to the Sector Secrets room. We're going to do our morning of some short-term trading. And in the meanwhile, keep an eye on the economic calendar. It doesn't seem to be too busy this week, at least today. Not too crazy today, but we do have quite a bit of FOMC speak coming up. And if you haven't already, pencil in the date. We've moved it out 1 week, February 23, 8 p.m. We're going to talk about timeframes and strategies that I'm already using this year that we've been testing for the past 10 months with an indicator that I have been using for the last 10 years that we finally automated and really, quite frankly, improved upon. Super stoked to share that with you all. February 23. All right, gang. Until tomorrow, be good to each other.